Well, as promised, let's go to the management of Shriram Properties. We have a lot of factors in play, rising interest rates, but the real estate sector seems to be doing well with strong demand trends. But we'll speak to Shriram Properties to understand the expansion plans and pricing scenario as well. We have the Managing Director, Murli Malayappan, to discuss the outlook going forward as well. So good afternoon. Thanks a lot for joining us. I wanted to understand your product pipeline, the launch that you're planning this year. 12 likely launches in FY23, but Q1 was muted in terms of launches. Around 1 or 2 is what you did. Will you be able to keep up with the pace of your guidance as far as launches are concerned? And what is the targeted area in terms of launches? Will it be, say, via a joint development? Will it be a JV? What is the development mode?
We have planned about 11 projects this year, and we have done only 1 in Q1. And Q2, there are a couple of more projects lined up. And Q3, as you know, that this festival season is catching up in India now. After 3 years, India is getting into big festive mood. So we are also aligning to that festivity, what we are looking at now. So quite a lot of projects are lined up, and also good number of offers are being lined up for Q3. We should be able to meet our projections, whatever we have given, guideline we have given, we should be able to do that. And the market is looking very positive. We are extremely bullish on the market.
You said 11 projects or 12 projects to be launched this year?
11. Out of which one is already launched.
Okay,
yeah.
Okay, got it.
And can you tell us how many are going to be launched in Q2, Q3 and Q4? Can you give us the breakup?
Q2 about 2 projects, and Q3 we should be able to do about 6 projects. So in by end of Q3 we would have done out of 11, 9 projects would have launched.
No, 1 done, then 2 more in Q2. That takes us to 3 and plus 6 then. And then in Q4 you'll have 2 more. And when you said you will maintain the targets that you had told us earlier, you mean a volume target of 4.6 million square feet and collections of 1,700 for this year?
Yeah, that is on track now as on date. That is on track. So we don't see any major macro issue at this point of time. Hence, that should happen as per our timeline, what we are planning now.
Okay. And this volume growth that you're expecting at 4.6 million square feet with collections rising, in terms of pricing as well, will you see a growth? So that value growth that will come in for you, how much of it will come from pricing as well? Are you able to push more prices after what you saw in second half of FY22 and Q1 as well?
Yeah, as I have been maintaining that price increase is inevitable. We expect the price increase to happen substantially. I expect the price to go up at least another 5 to 8% in the next 6 months' time. So price increase is becoming inevitable due to several factors. As I keep maintaining, the consolidation is one factor which is driving us very, very aggressive. So price will happen. Already we increased some of the projects' prices now, and we'll further increase the prices during this H2.
You said, but there'll be lucrative, attractive offers for customers during Diwali. So how does that tie in with the planned price increase? Yeah.
So, I mean, as I said, after 3 years, this is the first time, India getting into big festive mood. And we have already started witnessing a lot of interest from the prospective customers. Hence, we are also rolling out quite a lot. In fact, some of the projects were lined up to synchronize with the festival season. That's also one reason we pushed for Q3. So we are coming out with some attractive offers for Q3 with price increase is what we are looking at now. So price increase is becoming inevitable, and we will. I'm very positive about price increase.
Okay, but you're sensitive about the price increase. There will be some offers, but because of the inevitability of price increases, they'll go through, is what you're saying, despite the discounts that you're talking about.
Yeah, no, there's no discounts. It's a festival offer. It's a packaging.
Oh,
basically, some people are doing, 25/75, some 20/70/10, this kind of offer. But as price increase happens, it's not a discount.
We all love discounts and offers, right?
Festive season and offers is something that goes together. I wanted to understand cash flows as well, because in real estate sector, that is one way to understand the health of the company as well. I was looking at your investor presentation, the estimated receipts from unsold units around 2,600 crore rupees, collection spending from sold units around 3,000 crore rupees. By what is the annual free cash flow that you can generate? You did say 1,700 crore rupees is the collection in FY23. What is the free cash flow expected, say, over the next 2 to 3 years?
The collection, as I said, it is going as per the plan now. Every month on month, we have been, clogging about 100 crores plus. And during Q3, Q4, it will increase. So collection is happening now. Free cash flow, we should be able to generate close to about 250 to 300 crores during this financial year. That is also on track today. So we are also aggressively looking at new projects as we go on.
You said that consolidation is taking place. Have you been able to acquire any projects which were under financial stress, duress, any builders that you've acquired? And if you could tell us a little bit more on that.
Plenty of projects in pipeline. In fact, we have closed some projects with some of the NBFCs, and we have launched. As we speak, we just concluded one project with a small developer in Bangalore, and a couple of other projects we actually taken over from other smaller developers and launched. One in Chennai, we are in discussions now. We should get closed. So plenty of opportunities are there because of the consolidation on all the smaller developers who could not deliver. So they are all folding into it, either through NCLT or ARC or through NBFC model. As you know that we have lined up quite a lot of projects, and more than about 35% of the projects are in the development management. Yeah. And mostly, it's from other developers who are stuck or who have not been able to do it.
Okay. So that is about working with smaller developers. Having said whatever we discussed, what is the outlook on debt? Because you will be generating free cash flows of around 250 to 300 crore rupees. Your current net debt in the quarter gone by was around 364 crore rupees. What is the plan by the end of the year? And will your share of debt coming in from NBFCs, that is around 50%, it's higher on that side, will that continue?
No, that NBFC portion is already started coming down now. So we already replaced some of the NBFCs with public sector banks, and that will come down drastically. Overall, net debt position is likely to come down further by end of the fiscal FY23.
Okay. All right, Mr. Malayappan, thanks a lot for joining us and taking us through all the details. So that's the word coming in from Shriram Properties. Demand remains strong.